Good morning, everyone. Welcome to Ainsley News. Thursday, 16th of Sep. Today we're talking gold. 40,000 Comex gold contracts have been acquired by an anonymous whale. Whales moving the markets are more common in crypto, but since the 10th of August, a new major player has appeared on the long side of the gold futures contract market. Raw data shows a large non-commercial trader has amassed as many as 40,000 Comex gold contracts, the equivalent of 4 million ounces of gold. That's a cool 9.85 billion Australian dollars. These reports are coming from Ted Butler, the preeminent market analyst who decrypts the opaque monthly commitment of traders reports produced by the CFTC. As per Ted and a number of other analysts, the buyer is a non-commercial trader, which means that they aren't involved with the direct trade of the commodity. By contrast, a commercial trader might also be an auto manufacturer like Toyota that locks in a price for silver to be used in their cars across the year to hedge against any price spikes. While we don't know exactly who the trader is, they are by definition a speculator, likely to be a hedge fund or a family office. While the identity isn't clear, the timing of the establishment of the position on the 10th of August was ideal, as the price had just crashed over the previous days from around $18.10 range to briefly down to $17.20. Ted Butler has argued that one market participant with the wherewithal on predisposition to take the position would be the billionaire hedge fund manager John Paulson. We covered Paulson's commentary on the gold market last week. Paulson had said publicly that he intends to leverage a long gold position to gain a return of 25 to 50 times on his original outlay. For investors in Paulson's leagues, there aren't many markets liquid enough to take that kind of position other than the Comex. Major moves need huge liquidity to soak up buy orders without moving the market in themselves. Historically, Paulson has been the largest holder of the most liquid gold ETF, GLD. So he's no stranger to the metal or the challenge of not building up the market while establishing a position. In a world dominated by mind-boggling numbers, it's important to consider how large this new long position is. For the uninitiated in the dark arts of the Comex futures, a contract is a specific amount of a commodity. A wheat contract sits at 5,000 bushels, or 136 metric tons. Gold futures contracts are at 100 troy ounces of gold, and they got 40,000 of those contracts. As per the Comex's initial margin requirements, the minimum cost per contract would be US $8,250 or US $330 million for the 40,000 contracts. The new long position is standing to claim 4 million ounces of the same gold, as we all know as 1 ounce gold bars. While this new position is unlikely to chart a new course for the US $11 trillion market in itself, if it is a major hedge fund, family office, or perennial investor with influence, then this may lead to a cascade of new money looking to hitch a ride on this first mover. If it is Paulson, our bet is that there are even more than a couple of investment houses looking to piggyback on the movement of an investor who's leveraged positions during the GFC to the tune of $20 billion betting against subprime mortgages. Whoever it is, there's a new player betting against the Comex gold shorts. And that's news for today. Great insight there for Comex and a new player on the market. Remember, jump over to ainsleyBullion.com.au for all things physical, gold, silver, and platinum. ainsleywealth.com.au for all things crypto, and goldsilverstandard.com for our own crypto built and backed by real gold and silver. Enjoy your Thursday, everyone. We'll catch you tomorrow for more news.